So the market has been dropping, okay, and very uncertain. And I'm pretty sure a lot of you are finding answers, okay, to this question here: what to do when the market drop? Yeah. So in this video, I'll be laying out, what you need to know, and my strategy on how to handle this market drop. Okay. So stay tuned. Now, I'm pretty sure a lot of you right now could be feeling, like that, yeah, panic, fearful, or even painful, all right, because your portfolio now keep on going down, and then maybe confused, not know what to do, and then feeling very uncertain, okay, do not really know what to do. So I do hope this video here will provide a bit of clarity, okay, on what you can, do next, okay, for your own investment. Now, I'll be laying out a few tips for you guys, okay, and things to know, okay, on how to navigate these stock downturns here, and hopefully it will provide you some assurance, okay, on how to handle it. So the number one is you need to know is bear markets and corrections are normal in the stock market, okay, and keep a long-term focus. Now the reason why is this. Because throughout the years, if you can see, there are 12 bear markets in global equities since the 1980s. That means almost 35 years, and they will always have bear markets, and there are 12 of them. Now, if you look at it, okay, throughout history here, okay, although there are 12 bear markets, history shows that equities typically post stronger results over the long term. Okay, so this is the thing that you need to know. Bear markets will definitely happen for sure. Okay, it's about how you handle it, how you react to it, and if you can take advantage of it, you can see the market throughout the years, it will definitely go higher and higher. Yeah, these are things that you need to know. So this is the same for S&P 500 also. Yes, there are market downs and every here and there, but eventually, if you can keep a long-term view, the market will always go up higher and higher. Yeah. So the next one is we will never know when a recession will start. We'll definitely don't know that one. Yeah, there won't be a very clear sign to tell you, hey, recession is happening already. Stock will start going down. Please exit right now. Okay, so there's no such thing. So what we need to know is they will end. This is the confirmed thing. All right, we will never know when the bear market will start, it will drop. But we will know it will end and it will recover eventually. Yeah. So you can see recession or market crash won't last forever. Yeah. And typically, whenever this happens throughout history, just take note, this type of market crash or the recession will only last around 1 to 2 years. Only 1 to 2 years, and it will eventually recover. So you can see in this chart. So this chart, how to read is like that. You can see the big grayish area here. This is the period, okay, where the recession happens. Okay, when recession happens and market drop, you can see the S&P 500 returns. Yes, it will drop. Each of them will drop, but eventually, can you see that the S&P 500 index will eventually rebound? And throughout the years, it will keep on be positive, and make profits so you can see they are more positive on top than the bottom one here, right? You can see that. Okay, so this is the thing about recessions. So the next thing to know is portfolio losses are definitely painful. I know that, yeah, but a strong recovery will follow after that. This is the thing that you need to take note. So the bull market rise, okay, were longer and stronger after the bear market drop. Now you can see, this is based on history from 1980 until today. So maybe some of you are quite worried. Whenever bear market happens, right? It's like, they will go on forever. Things are very fearful. It's like, world is going to end, right? Don't worry. You know why? Because there are so many bear markets happening throughout the years already. And on average, this bear market, yes, okay, you will suffer some losses. Okay, it's on average, there will be negative 30% losses, definitely during the bear market. And this bear market, on average, the length is around 282 days, right? But if you look at the green side, okay, the profit side, the upside, the average bull market, right, whenever the bull market comes, the returns is like 96% on average total return. And how long it lasts on average is 1,018 days, which is what? More than the 282 days. So the odds are actually in your favor if you stay invested and willing to think for the long term. So that's why, okay, I always tell my members, stocks always go down faster than they go up, right? Whenever it goes down, this is the one very fearful. It will definitely plunge very, very fast. Yeah, so stocks always go down faster than they go up, but they always go up more than they go down. So the odds are in your favor if, okay, you are willing to stay vested and willing to think long term. Okay, so this is a track record. This is statistics already. Okay, so if you don't believe me, okay, I will show you a few bear markets or market crashes as an example. So 2008 global financial crisis. Yes, the market dropped around 57%, but eventually you can see, it's like from October 2007 until March 2009, around 1.5 years to 2 years. But after that, you can see the market start to rebound. Okay, 2018 trade war, market dropped 20%, but after that, eventually, can you see, also recover back. 2020 COVID pandemic, I think a lot of this one, you are quite fresh in your mind, right? The whole market dropped 35%. I was like quite fearful. Everything is, stopped. The world is like ending already. The whole business cannot run, right? So if you are willing, okay, to endure the pain for a moment, you can see after that, hey, the market rebound quite strongly also. Okay, and the latest one, the 2022 market crash because of the high inflation and stuff, and then the Fed keep on increasing the interest rate, right? So it was quite a long period. Okay, you can see from January 2022, okay, until October 2022, the market dropped around 26%. But after that, okay, the market rebounds strongly. Okay, now, but the funny thing is this: if you are willing to think long term, can you see this? Each of these, bear market drops, eventually the market go higher and higher. So there's a market crasher, market crasher, market crasher, market crasher. But eventually, okay, the whole stock market went up. Right, the market keeps getting higher and higher. So that's why in my Telegram group here, you can see sometimes I provide some guidance, and some tips and my views here. So it's definitely open for you guys to join. It's free. So whenever sometimes when this market drop, I told the members inside there, there's no need to worry whether the market will crash or not. Why? Because it will definitely crash again sooner or later if you are vested in the stock market long term. But the most important thing is this: it will recover, okay, and it will go up higher and higher. So the only difference is this, okay, that makes a bad and good investor is whether you have the guts to take advantage of it whenever the market crashes. This is the key difference here. Okay, so don't get pushed out because of fear, or from this bear market. Yeah. Then lastly, I told them this as a some kind of a joke. Okay, I told them 10 years later. Okay, I mean from today, right? You would not remember the fear you felt in a 50% drop, but you will forever remember the pain of selling at $10 when the stock hits $100. Right? Because like it's quite true. You see, because like the market dropped and 2020 or 2022, right? Oh, it's like the whole world is ending, and because of COVID and stuff, it's quite painful. Your portfolio, you lost money and stuff. But you think back right now, the whole market recovered. If you provided to buy the good stocks, it's like, hey, I don't really remember the fear already. But the stocks that perhaps you told yourself that you want to buy, but you are so fearful, that you don't dare to even touch it because the price is dropping. Eventually, if you recover, then you always remember that regret. Yeah, so don't be like this. Now, next is this: don't time the market. Okay, the best and worst days of returns often happen close together. So you see, we will never know that the increase in stock price is the start of the bull market until it's obvious. I tell you, it's impossible to almost time it or to identify that yes, this price increase, the moment it's the start of the bull market already. You will never know that one. Okay, so there are a lot of people, right now that the market is crashing and everything already. I better move everything to cash. Okay, then when the market start to recover, then I enter back. But this question of when the market start to recover, no one will know. The market won't tell you, hey, I'm going to start bull market ready. Please enter now. No, it won't. It won't. Okay, so you see, there's research being done already. That there's people who move their stocks everything to 100% cash lah. Okay, during the bear market. Okay, in 3 months cash, there's a 74% probability of you underperforming, and the underperformance is about negative 4.1%. Right, this 60-40 portfolio is that they compare it with a 60% stock and 40% cash lah. So they are using that as a comparison. So if you continue keep cash for 6 months, 71% of you underperforming, chance of you underperforming, and you will underperform by negative 7.4%. And 12 months is what? It's confirmed you were 87% underperform already, but with an average underperformance of negative 13.3%. All right. So don't keep 100% cash. Okay. Yes, I do understand some of you want to keep cash in case the price drop and stuff. You want to keep on average down. All right. It's a balance for you guys. See which is your risk tolerance here. Some people prefer to keep 10% cash. Some people need to keep 20% cash. But the idea is, okay, don't try to time the market and exit everything, put everything into cash. Okay. Why? Because there is also a risk of you missing the boat and enjoy the full recovery. Okay, so I always tell my members, okay, if you don't want to miss out the big rally, when the big rally really starts, best to slowly add to our undervalued stocks and stay vested. Okay, my experience has always been telling me this because whenever I look at the stock that I really want to buy, it's quite painful because there's a stock that I wanted to buy drops at 50%. Drop 50%. Okay, then I don't want to buy. Like, at that time I don't want to buy. Okay, yes, lucky I didn't buy because dropped 50%. But eventually when the market recovers, this stock went up another 200 to 300%. Then at that time I told myself, wow, if let's say on hindsight, I know this stock will go up 300%. Okay, will I willing to endure that temporary 50% loss? So the answer is actually yes. I'm willing to endure the temporary 50% loss. Okay, because this stock later on will go back up 300%. But of course, this is on hindsight lah. Right. So the thing is this: if you don't want to miss out the big rally, slowly add. Okay, be willing to endure temporary losses. When the market starts to become bullish and the market become confident, the market will recover. All right. Okay. Next. Now a caveat. This only holds true, all right, if you own good, profitable, and growing companies. All right. If you own bad companies, this doesn't work. So this chart here speaks 1,000 words. You want to buy damaged stocks where the price go down, but that business keep on going up. Okay, not all stock go down. That means you need to buy more. There's a lot of very bad mistake by investors is when any stock that they buy go down, I average down. I just want to average down to lower my average cost. Why? Because a lower average cost, when it recovered, recover easier. Instead of recover very high, right? I recover the moment, then I sell. That's the logic most investors do. But the problem is when they are averaging down, they're averaging down on the declining business. When the declining business is impossible for the stock, to recover back. Market is not stupid to go up for you. Do you understand that? So you don't want to do that. All right. So an overall picture, this is something that you want to own. Stock market will go up and down. But do focus on the business. When it goes down, undervalued, slowly add. All right. So what you can do right now overall, so you can follow these tips, to avoid acting emotionally, and take advantage of any market drop. So first, you tune out the noise. Tune out the noise. Don't really get influenced by the headlines and the news and in the social media. Go back in your portfolio and review back your stocks. Identify why their prices are dropping. Do they drop because the business is it declining? Or is it just pure market sentiment that suddenly the market just got pessimistic, they got very negative, and that's why everyone is selling and make the price drop? So if you identify, it's market sentiment, then don't worry. But if it's because of the business, then the next issue that you need to go ask yourself is this issue or the problem temporary, or is just a permanent problem which they can eventually recover? So, and the stock is an opportunity. If the business is okay, there's a chance of it to recover, all right, and the stock is undervalued. This is only an opportunity. It's only an opportunity if the business is okay and the stock is undervalued. Now, the next question, of course, if you don't know about your companies and you can't really make decisions whether your company is it okay or not, or is this the problem they're facing is temporary or permanent, that means you may not really understand your company that well already, and you will 100%. I confirm. You will 100% act emotionally and lose money. Why? Because you will be, swayed because of the stock price movement. Because the stock price is your only information to make decision. All right. And if you rely on the stock price, I tell you, you will be manipulated by the market one. And you definitely lose money. So go back and think back again. Whether the stocks that in your portfolio, do you understand them or not? If not, I highly suggest you guys to reevaluate your investing strategy right now. All right. Next. Now, perhaps during these market crashes and stuff, right? What are the type of stocks to focus on? During this type of market crashes. Now, the things that I always like to put in my portfolio is this: good and growing companies with strong economic moats. If you invest in a company with strong economic moats, it's very, very helpful when the market crashes and the price drops. Why? Because it's not just because we want strong economic moats for the company to keep growing, but I found that there's another underlying reason why we want to focus such companies. Because whenever any market crash and the price drops, right? Number one, it will give you assurance that the business is hard to fail. Because it's very strong, right? And it's very, very hard to fail. It's just that the stock price just being, emotional and stuff. But the business is very hard to fail. Then the products that they are, selling, to their customers, they are very important, to the commercial customers and the individual consumer. So customers will definitely continue paying them because it's so important. It doesn't matter recession or stuff, but they will keep on have to pay them. So there's constant revenue coming in. Then it's also very difficult for the competitors to take their market share. All right. And because of this, right, we know that the business, there's a strong chance to weather through recession because, customers keep on paying them. There's cash flow, there's revenue, right? And then that it will continue to sustain. And when the market or economy recovers, they will resume back their growth, right? So if you know your business and they have a very strong economic moat, this gives you a confidence to add more stocks. And secondly, conviction to hold through the volatility. A lot of people, it's easy to buy stocks. Easy to buy because you do your analysis and stuff, easy to buy. But the problem only starts when the price drops. And that's the hard part on holding a stock. So you need to build conviction. And the conviction will help you hold through volatility. All right. And always believe that the stock price will recover when the business recovers or continue to grow. All right. Okay, so this is a few example of the very strong companies, okay, with their very strong economic moat. Like for example, CrowdStrike, okay, you know that CrowdStrike is a cybersecurity company. They need their service to protect from hacks, or even cyber attacks, right? So whenever recession or not, do you think okay that people okay because of recession, my company may have my business got affected, I will stop using CrowdStrike? No, it's difficult because first we know okay cybersecurity CrowdStrike is very very sticky. It's a very high switching cost and it's so mission critical that companies will definitely have to use them no matter what. Yeah, Palantir also same thing because the moment they use Palantir, their business get even more efficient and they save even more money. Right? It doesn't make sense not to use Palantir during, let's say, a market drop or a recession. Because if they didn't use it, their business cost will increase. It doesn't make sense. So I need Palantir even more during recession because it helps me navigate the whole economy and help my business save more, even more money. So that's why it's so sticky. And that's why you build this kind of conviction, you know your company is doing very well. It's the same thing for ServiceNow also. Okay, ServiceNow and also TSMC. It's very, very strong companies right here. All right. Now, with regards to TSMC here, right now, if you want to know why, okay, TSMC is one of my top 3 undervalued AI stock right now, you can continue to subscribe my YouTube because will be on my next video. Okay, I will share with you my top 3 undervalued AI stock, and one of them is TSMC, and I will share with you the reasons why. Okay, and right now a lot of these 3 stocks are undervalued already. All right. Okay, so I do hope you guys enjoyed this video and get a lot of value from it. Now, if you like, okay, to get some, more information, okay, or engagement here, do consider subscribing our newsletter, or if you are finding a stock community, okay, where you can get some guidance, and tips, all right, you can join our Telegram also. You can scan the QR code or even, okay, click the link down below. All right, so see you in my next video, guys, and thanks for watching.